These are 5 stocks I stole from Warren Buffett's portfolio. And when I mean stole, I did not actually copy him blindly. Now, because Warren Buffett actually bought a particular stock, does not mean that tomorrow morning we wake up and go and start buying those stocks. No. What we're going to be examining in this video is what attracted him to these businesses in the first place. Are these businesses still profitable today? How do these businesses reward their shareholders? So these are what we're going to be examining in this video. So I will encourage you to watch this video to the end to find out these 5 profitable, amazing companies in Warren Buffett's portfolio. And by way of introduction, if you're just coming across my video for the very first time, my name is Charles Ojefo, and on this channel, I teach people how to make, manage, and multiply money. So subscribe to my channel and also give this video a thumbs up, and also leave your comments in the comment section to know if you are interested in buying these companies or not. Now quickly, if you want to join my investment community, you can use the link in the description of this video to join. My investment community is a community where I teach people about the stock market and about financial literacy. So if you are interested, you go to the link in this description of this video and join the WhatsApp community and the Telegram community. So quickly, let's dive right in. Number 1 on my list is HP. Now, when people hear about HP, what comes to their mind is laptop computers, desktop computers, printers, and that is why the company is always overlooked. But beyond this is a company that produces products used by government parastatals, institutions, schools, businesses, and this can create consistent cash flow. And as we have seen, they don't only sell laptops, desktops, and printers, they also sell accessories, computer accessories such as inks and other computer accessories. So that means that it is a company that has consistently created cash flow. And we can see this in their financial reports. For 2025, they reported a cash flow from operations, which was $3.7 billion. And out of this $3.7 billion, $2.9 billion is considered as free cash flow, while $1.9 billion was shared to shareholders as profit from dividends and from share buybacks. So this company has consistently bought back their shares from the public, which has made the company very valuable. And also, they paid in H1 2026, they paid dividends of 30 cents per share. So it is actually a company that is consistent with dividend payments. So this company is good to hold for the long term. Number 2 on my list is General Motors. Now, General Motors is a company in the automobile sector of the United States of America, and is also in Warren Buffett's portfolio. Now, General Motors has consistently generated cash for the business, and it has also returned capital to investors. Now, what is so particular about General Motors is that they have consistently bought back their shares. Last year, they bought back 4 billion worth of their shares, which was 2025, and this year they are considering buying 6 billion worth of their shares. Now, this consistent buying of shares would make the General Motors more competitive. It will make it more profitable, and it will also return profits to investors. Now, quickly, General Motors is a very good brand, and in 2025, they paid 57 cents as dividends to all their shareholders, 57 cents per share, and they also paid 18 cents in Q1 2026 as dividends per share. So quickly now, will General Motors continue to generate cash? This is one question everybody is asking. Will they continue to buy back their shares? Will they continue to be a dividend paying company? And will they also continue to navigate the problems and the challenges in the automobile sector, because they are looking into expanding more into electric cars, and they have competition with the Chinese, and they also have competition with Tesla. So will they continue to navigate the challenges in the automobile industry? This is one question everybody is asking. Number 3 on my list is Coca-Cola. Now, this is by far one of Warren Buffett's greatest assets and one of Warren Buffett's greatest investments. Quickly, what is so unique about Coca-Cola? Number 1 is that they are a global brand. Coca-Cola is a global beverage brand Number two is that they are a global marketing powerhouse. Number three is that they have the ability to sell multiple units of their beverages all over the world. Now, another interesting and striking thing about Coca-Cola is that they are a company that is a cash machine. In 2025 alone, they generated cash flow from operations of $7.4 billion. And out of this $7.4 billion, $5.3 billion is free cash flow. So it is a company that has generated a lot of cash in its operations. And also, they have declared 64 annual dividends since inception. So they are a dividend king. And also, they've increased their dividends from 51 cents to about 53 cents. So this company is actually a company that generates cash and pays dividends consistently. So it is a company you should look into. Number four stock on my list is Bank of America. Now, this Bank of America is in the financial sector of the United States of America and is also a stock in Warren Buffett's portfolio. Now, one striking thing about Bank of America is that they reported a net income of 30 billion for full year 2025, and in 2026 alone, they've already reported a net income of 17 billion as compared to 14 billion the previous year. And also, this company has increased their dividends from by 14%. That means they were previously paying a dividend of 28 cents and it has increased to 32 cents. So this company is actually a very good company to invest in and to look into. Now, another striking thing to note is that they are under a 40 billion share buyback operation. So they've been maintaining this 40 billion share buyback operation. So they are aggressively buying back their shares. So for a company to aggressively buy back their shares, it means that they have free operational cash flow or free cash flow to be able to buy back their shares. They are not owing and they are buying back their shares. So it's a company that you should look into. Number five stock on my list in Warren Buffett's portfolio is Occidental Petroleum, and this stock is in the energy sector. Now, quickly, Berkshire Hathaway, which is the company of Warren Buffett, has a direct link with this Occidental Petroleum because there was an acquisition that was done in 2019, of which Berkshire Hathaway was one that financed that acquisition for Occidental Petroleum. Now, Occidental Petroleum paid a dividend of 96 cents throughout 2025, 96 cents per share. And this year alone, they have increased their dividends per share, their quarterly dividends to 26 cents. And also, they have set aside money in paying their loans, their debts. They have set aside billions of dollars in paying back their debt. So this company is in the energy sector and is a company to look out for. Finally, the biggest lessons I learned from Warren Buffett's portfolio is not the aforementioned stocks, but his investment philosophy. Now, he invests in companies with competitive advantage. He invests in companies that are profitable, companies that their dividends match their business growth, and companies that are generating consistent cash flow. So these are the lessons I learned from Warren Buffett's portfolio. And another thing is that you should invest in companies with patience, not just investing in companies that will just rise and make you a millionaire overnight. You should invest in companies with compounding in your mind and reinvest your dividends, reinvest your capital appreciation. So if you found this video helpful, kindly give it a thumbs up and also join my investment community by using the link in the description of this video.